Right, let's bring in Mark Oswald now, strategist at ADM Investor Services, joins us on the line from London. Our guest host, Mary Nicola, is still with us here at the SGX. Mark, let's start with you. The PMIs, looking at the economics, are looking good and even outpacing what we've been seeing in the US. But do you think European companies have got a handle on inflation and cost? And is there some margin erosion that may creep in?
I think in terms of what's happening with prices in the Eurozone, people make a lot of the rise in the euro impairing export prospects. I think that's always been put the wrong way around. What one really needs to realise is the drop in import prices, i.e. the drop in prices for raw materials, is far more material to European manufacturers' prospects than any headwinds that might emerge from a stronger currency, which would only emerge over a much more protracted period of time. So in terms of their cost structures, yes, I think they're not doing too badly. I think really where the focal point for activity in Europe is, and this is probably quite good for stock markets, is the fact that there needs to be a lot more consolidation across the Eurozone, above all, because there are plenty of opportunities. We've seen a few start to materialise with some cross-border activity between France and Germany, but there's a lot more that can be done, above all in areas like, say, energy and infrastructure, and that's also the other area which needs to be focused on in terms of government spending. And it's to be hoped that when and if we get a new German coalition, that they will be focusing a lot more on that area.
Mark, and broadly, you mentioned the politics. You raised Germany. The horse trading is still going on there politically. We've got Italian elections around the corner. And allied to all of that, there's Labour unrest now in Germany. Are the politics back as a party spoiler to this renaissance that we've been seeing in European equities?
Well, the politics is always there. I think it's something which is effectively ephemeral in Europe. It's the question of whether markets are going to be that sensitive to the politics. I think the only one where they really are likely to be sensitive is to Italy, particularly if we get a gridlock situation after the election in March. Otherwise, the situation in Germany, well, I think what we call in Germany Ordnungspolitik will have eventually ruled the day, i.e. that sense of responsibility that the government has to be formed rather than any issues about party political stances. So it's there in the background. It will rear its ugly head from time to time, but investors will eventually always revert to, yes, but there's still a lot of value here. If you look at a lot of stock market indices in Europe, we're a long way from the highs to some of the broader measures. Italy, for example, is still 28,000 points away from the high it achieved back in 1999-2000. So there's plenty of opportunity there. And I think that will tend to always ride fairly roughshod over politics.